welcome to Billionaire. So this is RP here, recording video on Nifty. We are doing analysis with Elliott Wave, which is used for forecasting the price moves and price swings, and this is a bit of advanced method which will help us and find out the next trend of the market. In yesterday's Nifty analysis for 9th June 2022, we discussed that Nifty could be in an expanded flat correction and it will move like this. So similar thing has happened. Nifty opened a gap down below 16,293 and then went on the upside, almost hitting 16,500. Another thing we discussed in yesterday's video was Nifty would be trading in the range of 16,300 to 500. So this was the option chain analysis. We have a dedicated playlist for option chain analysis. You can watch that, and also do subscribe to our channel. So this will be a little bit brief analysis on the Nifty, and we daily post the Nifty analysis for the next day. And from past couple of days, our analysis is more or less equal to how the Nifty is moving. So you can imagine how Nifty can be projected with the Elliott wave. So this will be very useful method. So we will slowly learn it. I will try to keep it as simple as possible. So next chart is we are going to discuss is of Nifty, where we assume that this is a leading diagonal pattern. So simply to tell you in simple language, we can call this as a wedge pattern. It internally will have 5-wave moves, and then after that it will break that wedge pattern. So here we are assuming a break with expanded flat correction, and then a drop will come. A drop will be very severe if this is the leading diagonal pattern. So in this case, whatever new high it makes tomorrow, after that it should fall on the downside, breaking even this low. That's what we are assuming. So after this there will be a lot of gaps on the downside. It will create 1 or 2 gaps before going on the downside. So one thing to notice here is that this is the 15-minute chart, by the way. Here you see a positive divergence. Okay, price is making lower low, but RSI is making higher high. Okay, so in this case there is a problem, and that's why we have the second case. So first let's understand how this is looking like. Okay, so here we see that this expanded flat correction has 3, 5 waves. So here internally we see 3 waves of A wave. Okay, so this is A wave. B wave will have 3 waves. So here there is a problem, but I have adjusted it. I consider this as A wave here and B wave here, and then C wave internally here. So this will be A wave 3 waves, B wave 3 waves, and C wave 5 waves. So currently 1, 2 are completed of C wave, and third will be completed, fourth, fifth, and then drop. So here tomorrow if it opens a gap up about 16,500 and sustains that gap and then makes a new high, what we have to do is we have to wait for a break of this to consider the short opportunity. So let's say it opens gap up like this, goes down like this, goes up again, makes one more high. We have to wait for a break of this. If it breaks this, then we can assume a downside with this as a stop loss. So downside will be very big. It will fill the gap created by third wave. Okay, so that is one way to think for the next move. And yeah, after this it will be big fall. That's what you can understand from this chart. Okay, so second chart I have for which Vikas Mawani helped me with. He counted the waves. So this is how he had counted, and I think this is also right, where W, X, Y, XX and Z wave will be in progress. So Z wave will go upside towards 17,000. So it can be possible considering the moves and the labeling. And this here X wave looks to be an expanded flat correction. It really fits well. So this W was a zigzag, this Y was a flat correction, and then again this could be a zigzag wave going on the upside as a Z wave. Similarly, X wave here is a zigzag correction, and XX wave here is an expanded flat correction. So this follows alteration rule. So this looks to be a little bit proper way to move on the upside, and it can move on the upside. So we can expect a zigzag move like this going on the upside, and then the drop will come taking us below 15,600. Okay, so this is how this another pattern is, and it is also possible. So why we think that pattern? Because of today's big green candle, and arrow lines are parallel, which indicates the consolidation in the market. So even this tells us here that 200 EMA, which is pink line, near 17,000. So it is also possible that it will go and touch this and then drop on the downside. So this possibility is also there depending on the indicators and even price action, or you can say a bullish Marubozu created today. So this is how the wave count looks like if you want to get a detailed view on it. So this is how the count looks. W internally has 3 waves, X will have 3 waves, and Y will have 3 waves, XX will have 3 waves, and similarly Z will have 3 waves going towards 17,000. So that is one way to consider a different count. And what we have to do in second case is, what we have to wait if Nifty sustains above 16,600. So tomorrow, here we have a big resistance near 16,480. Okay, this resistance, if it has to cross, it has to open a gap up, and if it opens gap up and goes above 16,600, or let's say if it opens full gap up with strong move beyond 16,600, then we can consider that it will eventually break this high of 16,800 and move on the upside towards 17,000. So this is how we can consider the second move. We have to wait for it price to sustain about 16,600, because that is 0.618 Fibonacci, or you can say it is more than 60% of the fall. Okay, so this fall, it is more than 60% of that fall. Nifty has covered that move, then that will indicate a bullishness. Then we can look for the upside. So if it opens gap up and sustains about 16,600, wait for the pullback as a B wave, because this will be A wave, okay, like this, and B wave will be a consolidation wave, okay, and then C wave will go towards 17,000. So this is how we have to consider two cases. So that's all on this video. Thanks for watching. Do subscribe to the channel. Bye bye.